one of our longtime Pronto Tax School members. And Mr. Burrell has really specialized in disaster tax relief for a number of years now and worked with a bunch of different clients. We also have as a kind of a co-pilot on this broadcast, Tia Johnson, kind of his right-hand woman in his business. Before I forget, you guys, let's make sure to put the Premier Pro Tax contact info, Melda, into as a YouTube comment and into the chat if you don't mind. That way, as we go through this discussion, if people want to get in touch with Anthony and Tia and their team regarding this topic, they're able to do that. So I wanted to start off the discussion, Anthony, by just how did you get into this niche of helping clients to claim tax benefits related to disaster losses? How did this kind of like all start for you?
Well, Andy, first of all, I'd like to thank you for considering me for giving me this opportunity to speak live on YouTube. I guess if I had to go back, it would go back to Hurricane Harvey, which was one of the most devastating hurricanes that Houston may have experienced. And it was back in August of 2027. You know, this hurricane, I remember it like it was yesterday. It was like one Friday. It was like a gloomy cloud, and when the news media was talking about how bad this hurricane was going to be, but when I woke up that morning and turned on my television and saw those people in boats, I mean, it was boats, people wading in water. Water as high as 4 to 6 feet in these people's homes, you know, and I started getting a concern about it, and uh, I started to realize that those people gonna need some help, uh, and I started reaching out to the first of all, uh, I I was doing a tax audit during that period of time with an internal revenue agent, and I questioned him about it. I say, how are we going to determine the losses in these people's homes? And he reached out to me and he pointed me to the Safe Harbor Act. He said, now we have created a formula to be able to determine the losses. So, and at that point, I started studying the carrybacks. I was with a former company years ago. They kind of we kind of did a little study on it. So I took it another level and started training myself. I remember 3 o'clock in the morning. I had this laptop, iPad, and my cell phone, dropping and dragging different softwares, because when you do the carrybacks, you know at that time in 17 you had to go back to 14 and bring everything forward. So after about 3 o'clock in the morning, a light bulb went off. I said, I got it now. So then I started getting a burning desire. I said, now I can go into the communities, which I went into, contacting realtors that was hosting meetings in the communities, telling people about the safe harbor method, that they could carry their monies back and be able to get these large refunds, in these 4 years. I believe it was 14, 15, 16, and 17. And after I figured out I could really help these people, and so I say, you know what, we are having these disasters on a regular basis. This is a specialty that I need to specialize in, is handling storm disasters. And so at that point, after seeing those people lose everything, uh, I got a email one day, and this company, Canopy, uh, which is a tax resolution software company, advertising free transcripts. and I thought about it. I said, now these people lost everything. How are we going to get those returns to reduplicate those returns? And so
Mm.
I started marketing the transcripts as free and started, and then one thing led to another. And then I started developing a passion. I said, I got this. So, and that's sort of what made me become an expert in this field line of work of disasters. So, at that point, I started reaching out to the Port of Houston. Uh, uh, Me and T, I think we did interviews, sharing with the people about the safe harbor method, and I believe at that point, after Harvey, um, we flew to there to meet you, Andy, at Wilmington, North Carolina, and I believe Wilmington, and I think uh, it was Hurricane Wilma, if my memory serves correctly, back in 2018, and I think at that point yeah, it's when I developed the nickname, the Storm Chaser. If you remember that, Andy, when we talked about that in your office, and so now I just every year I started paying attention during the hurricane seasons and start prepping myself of the start educating myself of the changes is starting to help people because my hearts and prayers goes out to the people in California when I watch that. You watching your home burn up, that's not a good feeling. And so I started, I really, it was an honor and privilege for to come on this call to talk to you, talk to people about this because I think more tax preparers should start taking an interest in studying these disaster storms now because they are becoming quite frequently. We having them every year.
Yeah, so that's one of the things that's always impressed me about you, Anthony, is just the which I notice in a lot of our other members as well, is that combination of like really caring about people, caring about your community, really have wanting to help people. But there's a lot of instances where people want to help people, but in our business, you have to build up that technical knowledge as well. You got to do really like feel confident in the work that you're doing. So I think that's a great window, you guys, into kind of how Anthony built up his expertise, got information from the IRS, from Canopy, from other sources. And so in this call, a lot of you guys, and I know for us in our Los Angeles area offices, like we haven't done a whole lot of this work in a lot of cases, right? We don't have hurricanes in Los Angeles, so you probably, a lot of you guys that are set aside your time to be here during tax season, I might add, right, is um, we're trying to give you sort of a shortcut, if you could say, by learning from Anthony and Tia. And so that you can feel confident in a shorter amount of time, because in a lot of cases you're being presented with questions from clients that have had really traumatic experiences, right? So they might be emotional, their finances might be very affected. They might not have their records, all the kind of stuff that Anthony was going back in 2017 and dealing with, we're kind of dealing with right now. So that's one of the reasons we're so grateful that you guys are here with us today. I wanted to, because when I was first getting to know you, and I was like, this is really a sharp way to help people and also have a niche and have something where you're getting a lot of referrals, even from other tax professionals for this specialized type of work. Um, so let's do other tax professionals, Anthony, in general, and obviously it's hard to generalize, right? But do other tax professionals you feel like do know this stuff, or maybe some of us do, or what do you think? Or do when people come to you, they're saying, "Hey, my tax pro didn't know how to handle this." What do you think like our level of knowledge is as an industry overall on this topic?
It's not a level of knowledge. This is, you got to have some heart and passion for people. It's not a level of knowledge because it's not that hard to do. It's
Okay.
about taking the time to wanna help people. You know what I'm saying? And I'm not going to say that uh, 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 you know people don't know. I've got people referrals from other tax offices to handle this area, but also I did the client, but they went back to their professional tax clients, after they used up all of their deductions, from the carry forwards or the carry backs during that time.
Yeah.
That's what I noticed. It just a lot of them just didn't want to take the time out. I guess, it's not hard to do. We don't, people have their own opinions about, their level of expertise, what they want to specialize in their practice.
Yeah. Okay. So maybe thinking of it as a knowledge-based thing is not as important as understanding that the client relations with these kinds of situations is so I guess touchy, or it can be very delicate, that you kind of need to be in that mind frame to be highly effective. That does make sense. Can you give us an idea of just maybe like one or two brief like stories of like, because I'm trying to make sure that when we envision helping these kinds of clients, that we envision the kind of help that we can be to somebody in a really tough time, And so can you kind of share, one or two stories of, and maybe even like amounts of money that you were able to save them, kind of get
Oh,
us inspired to where we
okay.
feel like our technical knowledge is going to pay off and really change somebody's life for the better in a tough time.
Of course, Andy, I would love to do that. And I have many, many stories, but I know the time won't prevent us to go through all those stories. But I have one particular one in case. I remember one of my preparers here in the office was affected by Harvey, and of course, FEMA had to placed them in a new location because their homes was full of water.
Mhm.
And so there was a local hotel here close by my office, and I was invited to have dinner to talk with them about it. And so this particular client, she introduced me when I went there for dinner at the hotel where the FEMA was housing them. He stressed to me how what had happened to him in his home. The water from the surge from the water from Harvey was so devastating to it picked his home up and carried it over to his neighbor's lot. And so I said, yeah. So uh, using Canopy to getting his transcripts pulled, I was able to uh, capture the federal withholdings from 14 all the way back. And I think when all the checks added up, it was like about 55 or $60,000, which he was able to purchase a brand new home. And that was that was one of the most memorable story that I get because you look at it, he didn't have a home to go back to.
Yeah, right. Right. Yeah, and I guess with those kinds of experiences, right? Like we're grateful that you're still alive, but at the same time, once you have that gratitude of being alive, I mean, losing your home and not having another home to be going to is it's got to be is ranking up there as one of the more difficult things in life for sure. And so to help somebody to resolve that through your expertise, and then to be able to repeat that with other people and other clients, I could imagine be very very fulfilling. So getting towards and I liked how you mentioned that helping clients in this way on the technical side is not in most cases horribly difficult technically, right? So like, um, uh, can we move towards and if you guys see me taking notes here too, I'm going to be able to give you guys all the notes, the dream team members. I'm going to give you all the notes on along with the recording, and then we also have on this document here. We're going to go through an example and look at some actual tax forms and stuff like that. So you'll get these notes, the dream team members will. So can you kind of lead me through on the technical side of the work? And let's take the example of somebody's home was destroyed because that's probably both the most traumatic and unfortunately kind of one of the more common scenarios that we're facing. Can you walk me through what kind of tax relief can I get if my home was destroyed and sort of the steps involved with delivering this service to an affected client?
Well, Teal is I'm going to go ahead and let her speak on that. We talk about that. She put something together here. Go ahead, Teal.
Awesome.
Hey, Andy, thank you everyone for joining us. Like you said, I'm really glad to be here and share the stories. As I got to be introduced to the concept of adding value to clients, Mr. Burrell has really leaned into that. In the different scenarios and stories that I personally got to witness, it was just overwhelming of like, how do you, as a professional, continue to add value. So we're looking at it in a sense of like, hey, my home was destroyed in a natural disaster. Um, First, just that level of empathy and showing up to things like this, right? Like this is the first step of showing like you genuinely care, you have concerns, and you're willing to, in this busy season, learn new skills and techniques. It's really having the conversation with the client to have a true understanding of what the loss looks like. So there's different reports that you can pull as far as like what type of impact that they had with that disaster, and then knowing what forms to use. So a couple forms that you want to be very familiar with is the 1040, also form 4684. Let's see here. There was two other ones.
Uh,
Form 1045. I was like, wait, there's at least two other ones that was mentioned. Outside of those two forms, Mr. Bro, was there anything else that I missed?
well, the 4568, which carries over to Schedule A, as the as to increase your uh, 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 the itemized deduction. Well, I lost by the brain freeze there. It increases your itemized deduction.
Yeah. Okay. And so specifically with the loss calculation, so you're in terms of, so you have a client said my home was destroyed, right? So you're having a conversation to try to figure out what was the loss. So I had kind of done some research here of the loss calculated as the lesser of the adjusted basis or the decrease in fair market value. And then you have to reduce that by any like insurance reimbursement or to kind of arrive at like a net loss amount. So does that sound correct as far as calculating the loss? Are there kind of
That's correct, Andy. You sort of on it there. That's exactly how it's done.
okay. And is that something that you, when you're having this consultation with the client and sort of interviewing the client, like you'll kind of like pencil out on just to kind of see what the loss is, and then that's what sort of what the potential deduction that you're looking at is? Is that how you would see it going?
Well, yes, and it determine a lot of it is determine the fair market value of their house. You'll have to go back. A lot of that is done on 4584 forms for the casualty and theft loss. You have to go through the actual, the reimbursement back from the insurance factored out first the fair market, I mean the cost basis versus the fair market value versus in this case in California, the value after the fact. Most homes, if it's burned up, is zero. We know that. That's a no-brainer.
Interesting. Okay. And so it's almost then like when you're doing the initial interview, and again, just with the idea that like people that are showing up to this, especially during tax season, is like they're likely showing up because like they have situations that we're going to try to work through today, tomorrow, or next week, right? Like real life situations. And so is it almost like during the interview you're sort of filling out form 4684 to kind of like see get what the basis is, get what the fair market value is. Is that kind of like your work process, would you say?
Well, yes, and I normally put together a questionnaire, the data that we would need to get for the 45, 68, and we are working on that piece right
Gotcha.
now for the fire victims. Now that's our next step that we'll be following back up with you on how to gather the data. The difference is uh, uh, in Harvey. you know, uh, some of those homes were salvageable. You could
Yep.
salvage some of those homes. Uh, it's about gutting it out. And so it was a different formula you had to fill out, such as on the safe harbor method, like for a 500 square foot house, you would multiply that. The safe harbor method say was, well, it might be 240 how you determine the loss.
Yeah,
You know,
interesting.
the formula that you did, but in this case, it's a tad bit different. And so
Yeah. Okay. So it's almost like if you that could be one of the potential complications or area of expertise is if a home was like, for example, partially destroyed or and
yes,
kind of like being able to calculate that. Okay. Okay. Interesting. I want to leave time for, and also you guys, if you, for the Dream Team members who are in the room, in the meeting with us live, start adding if you're open, especially if you're here for a particular question. Obviously don't include any private client info, but like start putting in the chat any kind of questions you have, scenarios you might want to talk about, and then we're gonna because we're gonna leave plenty of time to be able to have discussion with the group as we go here. And so I did want to ask though um, sort of an open-ended question, I guess you could say, where what else, because you guys have been working in this niche for gosh, what, like seven plus years now, with a variety of different situations. Like, what didn't we talk about that for somebody that is either dealing with something in their local area where they're going to see repeated situations like this, or even somebody that might want to do, specialize in more of this kind of work, and like you have, and help clients even from different storms, different natural disasters. What did we not talk about that you think that it'd be definitely good to mention before we go into the Q&A portion?
uh, so I'm trying to see here. We covered the 46, 86. So, are you speaking about uh, uh, I'm sorry, y'all. I was intending to cut this phone off. I apologize for the noise, uh, but Andy, I don't see anything. Tia pretty much covered on the standard uh on this. I don't see anything else that we have not talked about. That's the basic starting point of the doing a casualty and theft loss. It's just different rulings for different states.
Yeah. Okay. So there may be some, and in many cases are like disaster specific, like the safe harbors that you mentioned. Because I noticed and we'll be able to go, everybody who's watching internally in the meeting, we're going to be able to go through an example using the actual software. So there might be different safe harbors or different specialized rules for particular disasters. So that might be something to definitely keep in
Oh,
mind.
yeah, because California has a little bit different. You guys have state returns versus Texas do not. So you have to utilize the 4684, the forms 540,
Yeah.
forms FTB, 3805
Yeah.
for the net operating loss for uh, for the state of California. It's a little different. Each state is a little different. It depends on the states.
Yeah. Okay. I think those are really good points. So I would want to check for the special rules that may apply to a particular disaster, like the safe harbors that you mentioned, that allows these maybe simplified calculations of loss amounts or other potentially beneficial I don't want to use the word loophole, but techniques that we might be able to use to increase the benefit to a client that's been affected. And then also the state return considerations. I think that's a really good note to keep in mind, especially for us California preparers, because the state, tax return can actually be a large part of the value that we provide in those states that have return requirements. Um,
But let me add one more, Andy. I noticed on the California state returns, it's been a lot of rules and changes on the carrybacks and the carry forwards.
yeah.
But from what I'm understanding here from my research, my team's research on California, it's not a carry back or carry forward, but looks like that you can amend a return. You can amend they allowing you to amend you can take, if you need the money, if it's a certain urgency for financing, they will allow you to amend or carry the loss, take the loss from the 25, even though the fires happened in January of 25, you can go ahead and take it on 24, but you cannot take the additional loss until 2027, is what I'm understanding in the research.
Yeah. So we're going to be able to get into, like I said, an example in a minute here for a California situation. But yeah, those are kind of, that's why I wanted to, and so grateful for you guys to do the training with this, because it's those little nuances, right? And those little things that you might know. I mean, something like that, it might change somebody's tax bill by $30,000, right? Or $50,000. And so let's think through an example. Like, let's say you are in 2025, your house has burned down, at the beginning of 2025. Obviously that's going to mess up your situation in a wide variety of ways, potentially. It may mess up your job situation, and so it may change your income level, right? So, in 2025, your income may be less, and therefore your tax rate may be less than it was in 2024. So where to place that loss and how to strategically use that loss to obtain the most amount of tax benefits and tax reduction. That's why we're so excited to have you guys on, because I know that you kind of have looked at, and the previous rule was different, right? You had to go back 3 years, so you were looking at different, but just kind of like understanding the finer points of where to put the loss, what are your options, how to use the loss in the best way. If there's loss still left over, can you claim that in a different year? And so I appreciate you guys putting in the research, that even though y'all are in Texas, but to kind of give us an insight on the California situation. If you wouldn't mind too, Imelda, I think that from this training, there's likely going to be some people that want to team up with the Premier Tax Pro team in some type of capacity for these kinds of issues. So if you just wouldn't mind, Imelda, dropping that contact info with their link. And also it shows you kind of how they're positioning this. I believe they have a nice free ebook that they offer on their website for clients and potential clients that are affected by this. So it just kind of shows you the business side of how Anthony and his team have been able to help people. So if you wouldn't mind, Imelda, just drop that, and also drop it into, let's make sure we get it onto the YouTube live. I wanted to, with our offices being in Los Angeles, this topic is, it's a hot topic and current topic, right? So the amount of property damage we saw in the LA fires was, just astronomical. These are not like $100,000 houses in a lot of cases. These are, $2 million, $5 million. And a lot of times they have different insurance problems. Maybe they don't have insurance. Maybe maybe they were underinsured, so they may still have, like, they got reimbursed for insurance, but they still have a huge loss relative to the fair market value. So this option of taking the disaster loss in the prior year, they had at the end of 2024 passed this sort of more generous ability for natural disasters that occurred before February 10th, 2025. And I'm going to be able to lead you guys through an example of this, but this kind of changed the normal rules that Anthony and his team have been working with in recent years of not being able to carry back, and has kind of opened back up that conversation of where to place the loss in which year. So those of you guys that attended the our update seminar, you probably recognize some of these slides, but this is just a sort of a brief recap of this particular topic. And the opportunity, the 10% of AGI thing, especially for somebody that has a $2 million house, they probably have a higher income, right? So 10% of AGI is really going to like limit their loss, as well as now they have to get over the itemized, the standard deduction. So it's kind of like a diluted situation. This new loss that they passed kind of made it more favorable, more easy or easier and more beneficial to be able to claim these kinds of losses. So if you were on our update webinar, you maybe want to dig back into this particular issue, but I just wanted to excerpt that for you. Right now, we are going to conclude the YouTube stream. I want to say everybody that attended on YouTube, thank you so much for watching, and we're going to move in